What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is going to be your stock market technical analysis update. Before we get into the charts, go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we're going to take a look at the ticker symbol SPY, which is our SP 500 ETF. So let's go ahead and crack open these charts and see what's going on in the stock market today. All right, so with today's SPY ETF price action, we did close down negative 0.63%. And we did find support at the closure of that gap. So remember, we had a gap that was open right around $347, and we did come down and close that gap and bounce off of that level. Now, it's not a bounce on the daily chart, it's just a bounce on the low of the day, and this selling could continue. So remember, we want to wait for the bull shakeout to complete, and we'll know it's over when we see a bounce off of one of these critical support levels. So don't forget about our Fibonacci retracement levels, which come down to the 0.236 of 346. And below that, we have the 0.382 at 341. If this bull rally is going to stay intact, I would expect to find support at 341 at the absolute lowest. If we start going lower than that, it could be a reversal and we could go back into a bear trend. We also have the gap fill at 344, so we still have plenty of support and we could still continue to sell off for another day or two before this bullish rally continues. So don't get too scared at this sell-off. It's completely expected, and if you remember, we said there is going to be a bull shakeout very soon. We still have the price action closing above the 5 EMA, and you can see how bullish this trend is with that 5 EMA still trading way above the 13 EMA. So we still have a very strong bullish trend, and when we're strongly trending in the bullish direction, we want to buy the dip. We don't want to ignore the fact that this is a very strong upward trend, and if we have a strong upward trend, we want to buy the strength off of the support. So we will eventually see support hold up and we will get a confirmation bounce, and that will be a great opportunity to enter this market. So down here around 344 and 342, we do have support. And if we continue to sell off and we start to bounce off of these levels, those are the opportunity that we're looking to buy in, because we'll be able to set our stop loss below support and we could take advantage of this bullish trend on the next rally up. We still have price targets to the upside at $355. And if we break out above 355, our next price target is going to be in the 360s. So there's still upside to this rally, and the trend is still very strong, and the price action is still very bullish as well. So don't be afraid of this market, and if you are scared of this market, you're more than likely letting your emotions get to you, because the technicals and the objective analysis is telling us to be bullish, because we have a bullish trend in the short term, in the medium term, and the long term. Remember, our short term bull trend is that 5 EMA above the 13. Our medium-term bull trend is the positive sloping 20 simple moving average, as well as a positive sloping 50 EMA. And if we zoom out on the market, we can see that we're in a long-term bullish trend ever since the crash in March. So all of the trend is still on your side, and all of the trends are still bullish on the S&P 500. Now, obviously, that can change in the short term, but right now in the short term, we're still very bullish, and we're looking at these support levels as a buying opportunity. We are cooling off after we did get overextended over that upper Bollinger Band, and it's completely normal to see the market pull back after it gets overextended to the upside. Remember, we had 3 gaps open, and I don't expect to see the gap down here at 329 get filled until we go back into a bearish trend, but it's completely likely that we could fill the gap at 344, maintain this bullish trend, and continue. So imagine a couple more days, this 13 EMA is going to come up here into this gap. The price action could come down, close the gap, and we could find support off that 13 EMA and begin to bounce and resume back towards our 355 price target. So that's the trade strategy right now, and we're going to follow the trend, and we're going to look towards that 355 level, and we're going to buy off of a support level, which will know support's held up once we get that confirmation bounce. If you want to be more aggressive, you can switch to the 1 hour chart and you can try to trade those support levels on the 1 hour chart, and that could give you a better entry because you'll have more data in a shorter amount of time. So you want to look for the same exact thing if you're going to trade the 1 hour chart. You're looking for a bounce off of support, and eventually you'll want to break about, test support level, and begin to head higher, and you could get in at a slightly better buying opportunity. It's slightly riskier if you're going to go with the smaller time frame, but if you want to be aggressive on this next bull rally, you would want to trade your time intervals off of the daily chart and go to something smaller like a 1 hour chart. So going back to the daily chart, don't forget our levels of support at 347, which we could have bounced off today. We'll see tomorrow where the price action wants to go. And then our next level of support below that are 346, $344, and then below that we have $341. If we start breaking down below $341, I would be a little hesitant to start buying the dip because we could start heading into a downtrend. So if you're not exactly sure what to do, don't forget we do these updates daily. So go ahead and subscribe and follow along, and we will always keep you up to date. Next up, let's take a look at the Nasdaq 100, and we're looking at the QQQ ETF. And we see the Nasdaq 100 also took a day to cool off again today, and that's still not surprising because we were still trading above the upper Bollinger Band. So remember, when we're trading above the upper Bollinger Band, it's very likely that we're going to get a retracement back into the trading range before resuming higher. We did come down very close to that 5 EMA today before bouncing and closing higher, but we still have the gap open that will close at a price level of about $286. So it could be too obvious that this gap is here, and maybe the market bulls are not going to let that gap close, but that could be a great support level to start adding to the Nasdaq 100 position. Our first price target on the Nasdaq has already been hit at 296, and our next price target is going to be the previous all-time high, which is about $302. So we still have some upside left on this market if we can bounce off of these support levels and continue trending higher. The bullish trend is still intact, and you can see that that 5 EMA is still trading way above all the moving averages, and we still have those nice upward sloping moving averages on the 20 and the 50 moving average down here. So we have a great bullish trend going on, and we want to take that as an opportunity to buy off these support levels. One other thing to note on the S&P 500 is we did go down on lower volume yet again, which is a great sign that we're not seeing high volume on down days, which tells us it's not likely big money is dumping their position. If we go back to the Nasdaq 100, we also see a down day on lower volume. So remember, we want to see lower volume on down days because that tells us that big money is not dumping out of their positions. So overall, this still looks like a complete, normal, healthy correction after we got overextended to the upside, and we're still looking very bullish. So that's why I was calling this a bull shakeout, because days like this make bulls question their existence, and it's a great opportunity for bulls that are trading objectively to start adding back into the market, getting ready for the next run up. Next up, let's go ahead and take a look at the Dow Jones Industrial, and we're looking at the DIA ETF. And we see the Dow Jones closing right about on its 5 EMA, and we're still trading above all of the support levels. So on the Dow, we did hit our first price target of $289, and our next level above that will be $292. But don't forget about this resistance trend line where the Dow has failed to form new highs on the daily chart, and we could start finding resistance somewhere around that $291 level. But right now we have bullish price action and we have bullish trending on all three indices. And the stock market, even after 2 days of selling, is still looking very bullish. So we want to use this opportunity to buy off of the strength of the support levels. And we're only about a day or two away from knowing when we're going to get that confirmation bounce. It's not likely that this selling is going to last for any more than about 3 or 4 days before we start trending back up. Next, let's go ahead and take a look at the VIX, which is our fear indicator. And we see the VIX was going up into the 27s today intraday, but did close below 27, down at 26.4 to close the day. So it was a volatile trading day, and remember the correlation between the VIX and the market is we want to see the VIX go higher when the market goes lower. So the market went lower today and the VIX went higher, which is completely normal, and we want to watch the VIX because if it breaks back above 27, we could start to see more volatility and more selling. But right now it's staying below 27, and that's a great sign because you can see that the trend is becoming bearish on the VIX, and we're starting to see that 5 EMA trading below all of the moving averages, and we're starting to see that nice downward bearish trend. So we want to see the VIX continue to bleed out and head lower, which is going to tell us that the stock market can continue to head higher and we could see new all-time highs this year. So everything's looking good on the VIX for the stock market bulls, and I don't see anything out of the ordinary. So next up, let's jump into the sectors driving the market, and first up is the financial sector. And we see financials did cool off today, coming back down, but still finding support right around that 13 EMA. We did close below the old resistance trend line, which should have acted as support, but we still are finding support just below that trend line right off of that 13 EMA. So overall, the bullish trend is still intact, but we really want to see the financial sector come out and form a new daily higher high above that $25.77 level. It would also be nice on the financials to see this 20 simple moving average come out and break above the 50, and then we will have all of the moving averages stacked to the bull side, and we would expect to see the financials go back into a bull market. So right now the financials are still looking good even after this 2 days of selling, but we do need to start going back up soon to maintain this bullish trend. Next up is the industrial sector, and we see industrials actually looking very bullish, closing up in the green today even though the market was down. We're still closing above the 5 EMA, and all of the moving averages are stacked to the bull side, and we're forming daily higher highs. So industrials are looking very strong, and it looks like a lot of money could be rotating into the industrial sector, and we know that because we see strength in industrials on a market down day. So great news for the industrial bulls, and that will be great news for the S&P 500, likely going to see new higher highs if we continue to see strength in the industrials. Next up is the healthcare sector, and we see healthcare also taking another day to cool off, but still maintaining its bullish trend. We would like to see healthcare find support and come out and take out this previous high and form another daily higher high. And if we can get the financials and the healthcare to catch up to the industrials, we could see the S&P 500 break out to new all-time highs this year. Next up is the US dollar, and we're looking at DXY, and we see the US dollar actually went down today. So the interesting part about the dollar going down today is the stock market also went down today. So we've typically had an inverse relationship between the dollar and the stock market, and normally if the dollar goes lower, we would have expected to see the stock market go higher. So it's only one day, but it is something to note because typically speaking, that trend has been inverse. So we will continue to watch the dollar, and we're going to look to see if that inverse relationship is starting to break away from the trend, and that will be great information for us for the rest of the year. Next up is gold, and we see gold struggling right around this support trend line. And I would like to see gold retest that support level and bounce before buying in. So if we can get a break above 1900 and then a test of 1900 as support and get a bounce, I would be a buyer of gold at this level. But it's still too soon to say, and I want to wait and watch gold for a little bit longer before I decide if I want to enter into a position. Next up is Apple, which is our market moving stock, and we see Apple went absolutely nowhere today, and it had a very volatile day closing out with a doji candle. We do have that gap on Apple that will close below at 117, but we are looking like we're just cooling off after Apple got overextended here and closed well above its Bollinger Band. Now Apple did find support at the 5 EMA, and the price action did close above all of the moving averages. So we still have bullish price action and we still have bullish trends. So we continue to turn our eyes on our upside price targets of $127 and $131. So it still looks like the Apple bulls want the stock to go higher. And because Apple is a market moving stock, we would expect strength in Apple to bring the rest of the stock market up there with it. Next up is Tesla, and we see the Tesla bulls still fully in control, and we're still getting bullish price action, and we're strengthening that bullish trend. The price action's closing near the top of the Bollinger Band, and we are seeing the 5 EMA starting to break away and create separation from all of the other moving averages. So all the moving averages on Tesla are stacked to the bull side, and all of the price action is very bullish, closing continually over the 5 EMA. So our price target on Tesla is still $503, and if we can break that level, our next level above there is $530. So the Tesla bulls are fully in control, and I would look to see Tesla testing the 500s very soon. Next up is Bitcoin, and we see the Bitcoin bulls still fully in control with the price action still trading above that 5 EMA and the bullish trend still intact. We can see that that 20 simple moving average has now broken above the 50 EMA, which is telling us that the medium-term bullish trend is strengthening. So it still looks like the Bitcoin bulls are going to bring Bitcoin back up to $12,000. And if we can get a break above 12,000, we're still expecting to see $14,000 as our price target. Don't forget, Bitcoin could come all the way back down to 11,000 and test it as support and then make another run at this $12,000 level. But overall, it looks like Bitcoin is doing very well, and I'm looking to see for higher price targets very soon. So as you can see, the entire stock market is still bullish, and this couple days of selling has not technically broken any of the bullish trends on any of the sectors or any of the indices. So as a stock market bull, we want to buy off of these strength of support levels, and we want to be patient and wait for that confirmation bounce. Don't FOMO in. There's always going to be a buying opportunity right around the corner, so just exercise patience and watch these support levels at 347, 346, 344, and $341. If we get down to 341 and we start bouncing, you'll be glad you waited. If we start bouncing before then, you're still going to get a great entry, and we will have these upside price targets that we can still trade into. So be patient and wait for the right opportunity, and make sure you're managing your risk because we are trading at very high valuations up here. As you know, this magenta trend line is a very critical resistance level that we have seen sharp pullbacks off of this level once we've reached that area in the past. If you're not sure what I'm talking about, I can zoom out real quick, and you can see when we get up to the magenta trend line, we've had a pullback here. We got a huge pullback here, and going all the way back to 2018, when we get up to that level, we could get these giant pullbacks. Now, I'm not trying to scare you. I'm just trying to tell you to control your risk because we are getting back up into those levels. So good luck out there, everybody. Please remember to help me out by smashing that like button. I really hope these videos are helping you out, and if you haven't already, go ahead and subscribe to my channel so you can follow along with my daily updates. Thanks for watching, everybody, and as always, I will see you in the next episode.